What's good, maybe. Um, so obviously today is Saturday. Um, so yeah, there was no trades today at all. This is from yesterday. Um, this is just no trades today. So today I'm gonna be going over how you can back test a strategy to figure out if it works or not. So yeah, first off, let me just get a. We'll just do this on some random. You should be doing this on a pair that you trade, because why the hell would you backtest something? Why would you work on something that you're not even going to trade? But for example, for sake of the video, I'm going to do it on this because I know the gold charts and I already kind of know what happened because I trade them every day, so you can't really backtest. But so backtesting is basically like using the bar replay. Using the bar replay to go back in time, and like let's say example you wanted to take a trade here with your strategy and your betting is going to go up, and you can back test to see what would have happened if you did take the trade, just like this kind of, right? You just let market play out. Obviously nothing happened. Yeah. So yeah, that's what backtesting is. So when you want to do this backtesting, definitely want to write down this stuff. So like back testing, if the trade hit or not. Trade 3. Alright, hopefully this doesn't get fucking copyrighted. Then what went wrong? Alright, just like this. Let me see if this. Oh, it's so. Oh, yeah, the camera's not good enough to read that, but basically, I have back testing trade 1, 2, 3, 4, 5. What went wrong if the trade didn't hit, or just in general with the trade. So now we're gonna go to the daily and just pick. Obviously, you're gonna want to back test the certain time of day that you trade. I trade New York Open, so I'm gonna want to trade from 9 to 11 on the charts. So I'm gonna go in here on the 1 hour, and I'm just gonna come up here kind of just like this, and September, what's this? Okay, we'll go right here. We'll go October. We'll go November 14th at Jesus. Oh my God. Let me do this again. Actually, yeah, no, that's good. Let me move this up. Okay, so I don't know what time exactly this was, but November 14th at that's 8, 7, 8, 9. Okay, so this is what we're at right now. So we can scroll onto the daily time frame. This is on Euro USD. My strategy calls for a look. Oh, fuck is the music at? Oh, we don't need that song. So my strategy calls for a liquidity sweep, break of structure, fair value gap, or order block, or equilibrium. All 5 if you can. So, but we just start. This is what the back testing looks like. So, going into the day of Friday, right? We're gonna look here. And so first we're gonna go. Actually, wait. Friday, Monday. This is a Monday. This is we're trading. So first we're gonna go to the Forex Factory. Wait, what day was this? the 18th. So then we go here, apply settings. Right here. Ooh, let me put this back over here. And since I'm also trading the euro, we'll apply the filter for that. All right, no red folder. Not a lot of crazy news, so nothing crazy to look out for, I guess. Coming into it, daily. We are bearish. As you can see, we're trending downwards. Extremely bearish. We have this daily fair value gap right here that just got filled and had a big wick reaction off of. So yeah, there's that so far. And looking over here, there's also a bunch of daily liquidity right here. And daily liquidity right here. Right, so those are probably our targets. So that's on the daily. Then we go to the 4 hour. Alright, yeah. Alright, looking at the 4 hour, we just swept 4 hour. This is the liquidity sweep part. Boom. Just swept 4 hour highs. Okay? And we have this 4 hour fair value gap along with the daily fair value gap right there. And we just swept 4 hour highs. So, right there we get our liquidity sweep. This is market opens at 9:30. I'll mark. I don't want to go in yet. So liquidity sweep, we have the liquidity sweep. No break of structure yet, but we're not on the 5 minute. We also have 4 hour liquidity right here. So scout onto the 1 hour. Again, swept the same highs basically. 1 hour fair value gap right here. That price came into. I think maybe it didn't. It didn't, but came into those other ones. Swept that, and now we have this big downward move at 9, right? There's nothing really. There's no fair value gaps made or anything. There was an hourly break of structure right here. But we're looking for a 5 minute, but the hourly, that's just more extra confirmation. So then we're going to go to the 30 minute time frame, and boom, perfect. We have a 30 minute fair value gap. Let me market open is at 9:30. All right, so market opens with that candle right here. We have this 30 minute fair value gap pre-market. And we can keep going. 15 minute, there's this right here. I guess that's not a fair value gap. There's this 15 minute fair value gap right here. And break of structure, 5 minute. We go on the 5 minute. Alright, here we go. 5 minute liquidity sweep right here. We get a break of structure all the way down here. So you'd have to be patient and simply just wait for the break of structure to happen. This is before market, but I'm assuming since this all happened before market, it's probably normal market hours are going to continue the way pre-market is. So, and we just filled this 5 minute fair value gap going to the downside. So we got our liquidity sweep, we got our break of structure on the 5 minute, and now we're basically just waiting for any sort of pullback into a fair value gap or an order block, or maybe even equilibrium of this small range right here to take shorts. Let me see here. Let me skip this song. Oh. This is a good song. Okay, so now we just are patiently waiting for a fair value gap. It could have been this fair value gap, to be honest. So yeah, we'll play through this, or I'll just skip through it. Price comes up, keeps going, consolidating. Nothing yet. Keep going. Nothing yet. All right, right here. We're coming really close to this. I'm pretty sure this is the 15 minute fair value gap right here. So we're just waiting. Waiting. Okay, right here. Go to the 1 minute. And now we wait. Since price is in this area of interest, we're going to wait for a wick reaction or a break of structure on the 1 minute. Okay, right there. No reaction. Wouldn't have entered. No reaction. Candle closed bullish. So now we're simply getting rid of this. Let me look. Nothing's happening throughout this. If we inverse this, fair value gap turned into an inverse fair value gap. That's basically the same as a break of structure. Boom, we got a break of structure on the 1 minute anyways in this 15-minute fair value gap right here. Right? So now simply I would just go short with my I would enter here. My take profit, my stops would be, let me go to the 5 minute. My stops would be maybe like somewhere in this order block area, ideally above those highs, or in this order block area. I'll go the order block area. And then take profit would be right here is this first take profit. And then I just continue to move it down to these other ones as trade goes. So right there I entered the trade. And now this is what I mean by backtesting. You can see if the trade will actually go in your direction or not, and if not, why it didn't or why you got stopped out. So yeah, obviously it takes a lot of patience right here, and yeah, there's an uptrend right here, but we're just gonna, like, there's an uptrend right here to a higher time frame fair value gap, so that means the uptrend probably won't hold. But yeah, so I'll just go ahead and play this. Oh my, let me just run it like this. Alright, so obviously let me go back a little. These songs are, I'm a little bit sick. Someone got me sick, so yeah. But let me look. Alright. So right here, I definitely would have moved my stops to break even, or I would have moved them above this high, right here. Let me go back just a little, just so I can actually do this correctly with the bar replay. Alright, so here, play, break of structure, sold right here. This is a theoretical back testing, right? Would have sold right here, let the trade run out on the 1 minute. Let me go to the 5 minute actually. Alright. Oops. Let me go back a little. Alright, so I definitely would have moved my stop loss by now to these highs probably, or even these ones. Let me look real quick. With this fair value gap made on the 5 minute, I could have even moved my stops to the top of this fair value gap, but I would just move it break even so I'm not trailing so close and give myself a chance to actually stay in the trade. So yeah, move the stops to break even, and then we'll keep playing this out. Oops. Alright, stops at break even. I would have got stopped out right there for break even. No money won or lost. But then as you can see, price goes all the way down into the direction, hitting the full take profit right there. So, was the trade bias correct? Yes. It's kind of crazy to me, honestly, just backtesting that I was able to see that somewhere in this area with a break of structure following the trading plan, you can go from this clear uptrend right here, and if you're good at trading and you follow your trading plan, look at that. You can spot the shifts and where the big banks want to sell off or do their moves. So, that's just trade one, right? You got 5 of these. This is the extra work it takes to be successful at anything. You can't just do it for a couple minutes a day and just expect to be all this. You actually have to put in work. And yeah, so trade 1, backtesting. The trade was break even. even. All right, and then what went wrong? This is the only part right here that went wrong, realistically, is I got stopped out at break even. And earlier in the video, I said I could put my stops above this high, but I'm just going to move them to break even so I don't lose money. That's where I went wrong. I need to put my stops at a place where price is actually an area where price could actually have a reversal versus just an area where I wouldn't lose any money. So I'm going to write that down. What went wrong? I moved my stops to break even instead of a strong reversal point. Instead of a strong reversal point. Even I move my stops to break even instead of a strong reversal point, just so I wouldn't lose money. Or just so I wouldn't be in drawdown. Wouldn't be in drawdown. Right. Okay, yeah. So, yeah. Like, obviously, this is a good trade. Just looking at it right here. Like, I just feel like maybe I shouldn't be so tight with my stop loss right off the bat. Euro USD actually has pretty clean price action. I'm honestly surprised with that. That's one thing I want to work on is instead of just trading gold versus the US dollar, trade something else. I don't like the S&P 500 really, or NASDAQ. I know a lot of people prefer that, but I just don't for some reason. I used to trade Euro USD and USD CAD a lot. So maybe I'll get back into that because obviously this price action is pretty pretty good. So yeah, I would have got taken out of this trade right. Oh my. Would have got taken out of this trade right here by the tick. And yeah, even down here I would have just trailed my stop like above the most recent highs that were formed, so I would have moved my stop here, then here, and then get taken out of the trade. If, for example, I just didn't ever mess with any of my stops, I would have hit that take profit. If I had two take profits, we can let this run out and see what happens. Alright, right there. Would have just... Alright, yeah, at some point it's just like... At some point it's just too much to actually like... What is this? 24th? Yeah, at some point it's just too much, too long to hold on, right? Like, this is in the morning time. This is from when I sold was at... sold later in the day. Yeah, I sold at like 12:05, so that's later in the day, but still all of this, like this is at 3:40, right? So you don't want to be holding a trade for 8 hours. That's just sucky. So yeah, you kind of just need to figure it out and stick to your bias, right? You could have been if you were bullish, obviously you probably would have taken this. You would have somehow with your strategy got in on this move right here, right? This up move before the down move that I took because I was on a bearish daily bias, right? But either way, if your bias is correct, then and you stick to your bias, ultimately you should be able to hit profitable trades. So yeah, that's basically how you can backtest, and backtesting is really just important because it's just practice, right? Like for example, you just take the NBA. Those people in the NBA aren't just screwing around. They didn't just get to the NBA by screwing around. They got there by showing up to the gym at like probably 4 in the morning and putting in the work before everyone else was there, and then putting in work after everyone else left, right? You got to show up early and leave late, and that's how you're going to ultimately, that's how you're going to start it's going to help you build discipline. You're going to be profitable if you put the time and effort in to watching the charts move. And yeah, that's basically how you backtest, and it's really good. It's a good thing to do. I still have 4 more. Obviously, one backtesting wouldn't take this long if you're just talking, but yeah, backtest. Backtesting if you are skeptical that your strategy doesn't work, but you have some some thoughts in the back of your head that maybe it's your emotions, go on to the bar replay mode and put your strategy to work, and you will figure out if your strategy is profitable or not, if your strategy does work. And yeah, and so that maybe if seeing that your strategy does actually work will give you a little bit more confidence. Maybe it won't, but just knowing that you have a strategy that actually works is a lot better than thinking it's your emotions your whole entire trading career when really you don't have a profitable strategy. And on top of that, your emotions aren't profitable, but you're never going to be profitable if your strategy isn't, right? So you got to make sure you have a profitable strategy. Mine is literally liquidity sweep, liquidity sweep on the 4 hour, 1 hour, plus daily bias first off, and then all this has to be in line with daily bias. Liquidity sweep on the 1 hour, 4 hour, break of structure on the 5 minute, after the liquidity sweep, right after the liquidity sweep. So really, I should have taken the trade right here. Right, we have the liquidity sweep, we have the break of structure, and then we get this fair value gap right here on the 5 minute after the break of structure. We get this. This is what really should have happened. We get this fair value gap right here. Right, price comes into it, and you would have sold right. You would have sold right here with this wick. So you sold somewhere on that in the fair value gap, and then look at that. Price just completely dumps down. That's why you need to catch the break of structure, the 5 minute break of structure. See that? Completely jumps down. That's why you need to catch the 5 minute break of structure right after the liquidity sweep, because you have a way better chance, it's way higher of a chance, way more likely that trade will go in your direction, because liquidity is what drives the market. It's what the banks use and all that. Also, I forgot to mention, like, I took the sell position here before it got into equilibrium, but look at it. It did tap into equilibrium of this previous range and then drop down. Equilibrium is where buyers and sellers have an equal area to buy and sell at. So, the transactions happen, and it's just like easy for everyone to get in or get out. Clearly people got out. That's why it sold down. But yeah. So yeah, take the break of 5 minute break of structure right after the liquidity sweep. But anyways, back to my strategy. Daily bias, all this has to be in line with the daily bias, 4 hour, 1 hour time frame liquidity sweep, 5 minute break of structure after the liquidity sweep, then a fair value gap, order block, or fair value gap, order block, or breaker block, or inverse fair value gap to replace the break of structure, right? All that. And on top of that, I don't use all that, and on top of that, equilibrium. If all 8 of those are in your trade, like if you have all 8 of those in your trade, then the trade should be extremely good, well thought out, and yeah. But yeah, liquidity sweep, daily bias, liquidity sweep, break of structure, fair value gap, order block entry. The fair value gap could even be on the 1 minute, preferably the 5 minute, just because those hold a little bit stronger. You're using the 5 minute break of structure anyways. You might as well use the 5 minute fair value gap. But yeah, this strategy does work. So if you guys want to use it, you can. I know no one watches this shit, but it works. And yeah, that's basically all I have for today.